Assalamualaikum and hi everyone. Today we would like to present the basis of Malaysia income tax. But first, let me introduce you my group members. First, my name is ASYIQIN binti SAMAH. The others are Hafizah binti Mazan, NABILAH binti SAIPUL KAMAL, SYAHANNANI binti ZAHARI, NURMAISARAH binti AIDILFITRI. We will present the basis of Malaysia income tax from the definition of taxation until the chargeable person. So what is tax? So tax means the collection of the share of individual and organizational income by a government under the authority of law. Tax also means a compulsory financial charge imposed on a taxpayer, such as an individual or a legal entity, by a government in order to raise a fund for government spending and various of public expenditure. An individual might be punished by law if he failed to pay the tax. And the tax collected by government is used to pay for public facilities such as highway, public school, public toilet, anything that can help make this country better. So that's all from me. I will pass to the next presenter. See you again later.
Hi, Assalamualaikum. My name is NURMAISARAH. I'm going to present about objective of taxations. Objective taxation is the primary purpose of taxation is to raise revenue to meet huge public expenditures. Most governmental activity must be financed by taxation, but it is not only the goal. In the other words, taxation policy has some non-revenue objective.
Hi, my name is SYAHANNANI binti ZAHARI. My number ID is MDA200120. I will talk about scope of charge in section 3. Scope of charge it means subject to and in accordance with this act. A tax to be a no as income tax shall be charged for each year of assessment upon the income of any person acquiring in or derived from Malaysia or receiving in Malaysia from outside Malaysia. Scope of charge is divided by two. First, the transaction must be income in nature and such income is acquired in or derived from Malaysia. Second, the transaction must be income in nature and it is received in Malaysia from outside Malaysia. It means from foreigner sources income. Okay, now I will continue my part. It is sources of income. Sources of income, it is the act does not define the meaning of income, but merely categorize the income under Section 4 and Section 4A. For Section 4 is classes of income on which tax is chargeable, while Section 4A is special classes of income on which tax is chargeable. I will talk first about Section 4. Section 4 refers to classes of income on which tax is chargeable is subject to this Act. The income upon which tax is chargeable under this Act is income in respect of first, gains or profit from the business for whatever period of time carried on. Second, gains or profit from unemployment. Third, dividend, interest or discount. Fourth, rent, royalty or premium. 5. Pension, annuity or other periodical payment not falling under any of the foregoing paragraph. And lastly, gain of profit not falling under any of the foregoing paragraph. Okay, for Section 4A, refer to special classes of income on which tax is chargeable, is notwithstanding Section 4 and subject to this Act. The income of a person not resident in Malaysia for the basis year for a year assessment in respect of first, amount paid in consideration of service rendered by the person or his employee in connection with the use of property or right belonging to, or the installation or operation of any plant, machinery, or other apparatus purchased from such person. Second, amount paid in consideration of technical advice given or assistance or service rendered in connection with the technical management or administration of any scientific, industrial or commercial undertaking, venture, project or scheme. Lastly, rent or other payment made under any agreement or arrangement for the use of any movable property.
Hi, Assalamualaikum. My name is Hafizah binti Makzan. I will continue about type of taxes. There are two types of taxes: direct taxes and indirect taxes. Direct taxes is paid directly by those on whom it is levied. In other words, direct taxes is one that the taxpayer pay directly to the government. These taxes cannot be shifted to any other person or group. For example of direct taxes is income tax, RPGT, stamp duty, and petroleum income tax. While indirect taxes is collected via third party. In other meaning, indirect tax is a one that can be passed on or shifted to another person or group by the person or business that own it. For example of direct taxes is sales tax, service, and GST.
Hi, it's me again. My name is NURMAISARAH and I'm going to present about classes of income. According to Section 4, the income on which tax is chargeable under this Act is income in respect of: first, gain or profits from a business for whatever period of time carried on; second, gain or profits from an employment; third, dividend, interest or discounts; fourth, rent, royalties or premium; fifth, pensions, annuities or other practical payment; and the last is gain or profits not falling under only of the foregoing paragraph.
Hi, Assalamualaikum. My name is AFIFAH NABILAH binti SAIPUL KAMAL. My student's ID number is MDA 20010119. So next, I will present about basis period, basis year, and year assessment. So what is year of assessment? Year assessment is the year in which tax is assessed with effect from 1st January 2000. Malaysia moved towards the implementation of current year's assessment. This results in the assessment of income tax to be concurrent with the derivations of the income. So for example, the basis year for the year assessment 2019 is the calendar year from 1st January 2019 to 31 December 2019. Basis period. Basis period is to assess the amount of tax. Inland Revenue Board look at income expenses during the financial year. This financial year is known as the basis period. There are two types of basis period. First, basis period for the individuals. Secondly, basis period for company. So for the individuals, the income source of a person other than a company, trust body, or cooperative society will be on calendar year basis. These are to facilitate the taxpayer on estimations on income tax, payment of tax, and submissions of return not later than 30 April or 30 June of the following year. So, for the company, only company, trust body, and cooperative society can have its basis period for year assessment to be on the calendar year basis or non-calendar year basis. Basis year. Basis year is the calendar year coinciding with the year of assessment failure year is the year that there is the failure to close the account to the normal accounting date, which is on 30 of December. Thank you.
Hi, my name is ASYIQIN binti SAMAH. The last subtopic that will be discussed today is about who is the chargeable person in income tax. According to Section 2 of Income Tax Act 1967, a chargeable person has three categories, which is a company, a body person, and a corporation sole individual. So, a body person means an incorporated body of person, not a company, including joint family ventures, but excluding partnership. Example of body persons such as club societies, trade associations, and etc. There is a difficulty in determining a chargeable person because tax rate applicable to each categories of chargeable person varies. Some are taxed at a flat rate, while others are taxed at scale rate or reduced rates. In conclusion, we can see that the instrument of taxation is a great notable on increasing the level of economic activity. So that's all from us, and we hope you obtain a great information from us today. Thank you and Assalamualaikum.